Now I should be able to share my screen. All right. Can you guys see my screen now?
Yeah.
All right,
Yes,
perfect.
sir.
Perfect, perfect. Again, hopefully you guys had a smooth day, smooth evening. Um, Even though this is like an intro, I still feel like even the introduction, the introductory information I have probably would be very useful for a lot of people because I don't really, the information I'm going to tell you, it's again some of the things that I have in my group, but, withholding a few things. But to start off with trading, first off, you need structure. You're going to need structure like on a technical basis, and you're going to need structure and like more so on a day-to-day basis. So the way you go about things is going to have a system, a standard operating procedure, SOP. Um, and we're going to go over what the SOP would be for you as a newcomer, or even if you've been trading for a while. Um, there's a certain way you go about this that makes life a lot easier. So let me just close this out. Go into my. Can you guys see my trading view?
Yes, sir.
Yes, sir.
Okay. So let's start off with your SOP.
Shit, I was gonna. Uh,
Hello?
Actually, not the neighbors. Nah, it's good. It's good.
Let me just
I don't want
mute.
neighbors to watch.
All right. So your SOP, what the heck? Your SOP or standard operating procedure. Number one, when you're coming into a week of trading, you have to plan things out in a way. What do I mean by plan things out? How do you plan things out? I thought it was random. I thought it was, you take what you take and you don't get upset. That's not the way to go about things. Even as a beginner,
Hold on.
um, e-
Yeah.
e- even as a beginner, it would be very, very, very beneficial for you if you can plan your weeks out before they even start. How do we do this? So, for example, we utilize Forex Factory, right? So set your filters to medium and red impact news. What does this mean? And what does this mean? Currencies. Currencies just means what type of news are you looking for? Are you looking for Australian news, Canadian news, um, European news, Britain news, Japanese news, New Zealand news, whatever it is? You need to look for whatever you're trying to trade. For us, we trade USD. Why is it USD? Well, if we're trading futures, NASDAQ and SPY, ES, and NQ or YM, all of these are US based equities and futures. So I'm only primarily focused on US dollar. Anything else to me is irrelevant. There could be CPI for, and I'll get over what these fundamental names mean, but there could be like a high impact news for Canadian dollar and does nothing to the US markets, right? It's irrelevant. So we're more so focused on the US dollar. So let's apply this filter here. And let's say this week right here. Let's also put this so you can see bank holidays too. So obviously today's a bank holiday. Now, coming into this as a newcomer, you may have no idea what any of these things mean. What is WEF annual meetings? What is President Trump speaks? What is final GDP, QQ? What is all these things? Flash manufacture. You don't know anything. You don't know what any of these things mean, and that's the work that's going to be required of you on the back end. Again, this is an introductionary type of, you know, you know, step, but On the back end, after this video, after this recording, whenever you watch it, you're gonna have to figure out, what do these news mean? What do they do to the market? And again, you can go back in time. We have the technology now. You can use TradingView, which is the platform that you'll be utilizing to do your charting, to go back in time and figure out, what do these events do to the markets? Because obviously people think news is random. News is it has random effects on the markets. But I can guarantee you, from my own experience, my own knowledge, and my students, some of my students are in here, they can tell you news is very, very repetitive. It will repeat the same patterns over and over again, even the timing over and over again. And you just simply have to understand and be able to go back and kind of deduce what this does on this specific day. You'll be prepared basically months ahead of time, weeks ahead of time, days ahead of time, because you already know what this WEF annual meetings is going to do. You already know what President Trump's speech is going to do. You already know what final GDP QQ is going to do. You already know what flash manufacturing PMI is going to do. What that does for you is it classifies the days in which you want to be really, really, how do I say, shooting for the stars, or days in which you don't really want to be going too crazy. So having expectations is one of those things that really, really tremendously affect your journey, because a lot of people come in day to day and they have no idea what to expect. They just take it day by day, and that's fine. However, they'll miss out on a lot of potential large swings. They'll miss out on, maybe a really bad day that they shouldn't even be touching. And doing this as your first step in your standard operating procedures, this will greatly, greatly affect your journey and your progress. Again, this is something that most people don't talk about. I do have some free videos on my YouTube that I will show you at the end of the introductory Zoom, that you can watch to kind of give you a little bit more insight on what I mean by all of this. But we'll move further. So the first part of your standard operating procedure would be check Forex factory, red, orange, folder news for USD. Now, the second step, after doing that, you have to figure out what days you want to trade versus what days you don't want to trade. So pick and choose which days to skip versus take advantage of. Now, remember what I said, most people don't have this information, so they'll just go day to day to day without really having any idea what to expect. It's not their fault, it's their ignorance. I'm teaching you guys early, whoever is here, and maybe whether you started trading or whether you're very, very early to the game, this will greatly, greatly, I want to say, take you leaps, years ahead of people that are just aimlessly going day to day without any idea what to expect. You can pick and choose which days to skip months, weeks, and days ahead of time, like I said before. Again, when you look at, the layout for this week, right? You can go back in time and look for that same exact thing. How would this look? So we have WEF annual meetings on Tuesday, tomorrow. So let's just use this, tool right here. Let's go back in time and let's look for that same thing. Right here, what do you see? Bank holiday. So, of course, we don't really care about this. We have Tuesday, January 21st, 2025, WEF annual meetings. So let's go back, utilize this replay tool, select the date. I'm just going to show you. Okay, so we can see what it did this day. Wonderful. Let's go back one more time. I like to say 3 years is however far you should go back. It's the maximum point in which you should go back because I want you to think about this. If you go back 10 years to look at what the market's done, that is irrelevant at this point because understand the markets is changing based on a 3 to 4 year presidential cycle. Every presidential cycle or market or term, I guess you should say, the market changes its behavior due to new policies, new, head of the feds or whatever it might be. But you'll get a lot of discrepancies if you go further than 3 years. So less is actually more in this sense. So again, in the last 3 years, we're going to do 2025, 2024, 2023. Further than that, it starts to actually give you lower accuracy in the things you're looking for. So this is information that again, most people would not know or would not be able to tell you because they have not done the research and the back end work. So you knowing this now is a really big thing because it saves you time. And saving you time saves you money. And saving you money saves you life, really. Um, and let's see. Okay, so this is January 2025. Like I said, Tuesday WEF earnings. You see that. Okay, let's go back another year. Let's see if this happened again, 2024. Let's just see. All right, 2024. I'm looking Tuesday WF annual meetings. Now I do see something that's new, Empire State Manufacturing Index. That is a news that we don't have this year. However, however, I want you to understand that it won't be perfect. However, this will still be useful to use. So let's still go back to this day, January 16th, 2024. Let's see. This doesn't look too good, does it? It does it, right? And I'm going to teach you guys something. Remember how I said we trade the futures markets, primarily NASDAQ, S&P, and we do have the Dow, which is also known as US 30 on the CFDs. This doesn't look too clean to me, but let me look at a few of these assets. Huh, this looks a lot cleaner to me, a lot more one directional. Interesting. I want you to remember this. We're going to talk about this in the future in this meeting. I just want you to remember that. But anyways, so that's 2024. Let's go back one more year. Um, let's see. So again, bank holiday, again, WEF annual. I'm not too worried about this red folder. January 17th, 2023. Let's go back again. Again, does it look too clean to me? It really doesn't, right? Let's go back and look at the other asset. Look at the difference, right? Look at the difference. This versus this. Again, most people, they wouldn't know this or they wouldn't be able to utilize this information because they wouldn't even know where to begin. So you seeing that, not only can you figure out which days you can trade and would be better for you to trade, would be not better for you to trade, you're also seeing which asset would be better for you to trade. And I hope you understand that this is major because again, a lot of people don't know this information and they're just trudging along, taking it day by day. But you understand that, okay, for Tuesday, WF annual earnings, I cannot trade ES or S&P futures. It just doesn't perform as well. So I'm going to trade YM or Dow because statistically, this is what has outperformed all the other assets. This is major. This is major. So let's go back to the standard opera. So now you understand which days to pick and choose versus to skip and take advantage of, and which assets to choose, right? So that's the second step of your standard operating procedures. Now, the third step is to formulate a technical plan. Now, this is, again, another important, very, very important part. I'm not going to go too deep into, my strategy and what I do because it would be unfair to my students who paid for that. But I will say I will give you a nice little introductory technical plan that honestly would be probably better than what any of us started here, even including my students in the past. This will probably set you up to do pretty well for yourself. And if you want to go further, again, um you can hit me up basically and we can talk about it if you want to go further than this, but this will set you up for success basically. Um so this technical plan that I'll be giving you guys is pretty simple. So the first step you're going to do, mark structure on 1 hour time frame. Second step, if bullish, I think I gotta accept somebody. Wait, did I accept them? Mm-mm-mm. Did I accept this person that was in this Zoom? Uh, where the heck? Me acting like I don't know how to use this. Oh, it's on my other screen. Okay.
You good,
Let's
Moon?
see.
That was just me. I just switched from my phone to my computer because I'm at my desk.
Oh, okay. Got you. All right. All right, cool. So second step, if bullish, enter after high is taken or when a higher low is created. If bearish, enter after a low is taken or when a lower high is created. Third step, target a 1 to 3 to 1 to 4. And all that means is for every $1 you risk, you get $3 back, or for every $1 you risk, you get $4 back. A higher RR rate of return is better long term. However, most people they struggle with getting also a high win rate. And win rate just means how often you lose versus you win. To be honest, it starts to become a little bit irrelevant when you start controlling your risk, but that's all I'll basically say for now.
Excuse me,
Um,
Mr. Moon. Is a negative R bad?
negative R is, well, you said I mind blown. Um, but negative R, there's actually some veterans in the field that have negative R, but for the majority of people, negative R will not be good for not only their mental, because you have to deal with knowing that every time you win, it's going to be less than your losses. And a lot of people won't be able to take that well mentally, right? Because let's say you're risking $30 to make $15, but when you do lose, it's $30, right? So you're going to fear ever losing whatsoever. So negative R presents a very, very dangerous scenario because it can lead you to not only having a mentally just distraught mind, meaning you can't perform because you're mentally scared to perform. Because again, you know that every time you lose, it's more than your wins by at least half or maybe more. So I hope that answers your question about negative R. Again, there are veterans that do these things, but again, I'd like to give an answer that would fit majority of people. Yeah, that's my answer on that, Thomas.
Thank you, Mr. Moon.
You're welcome, then. But yeah, continuing. This is a basic, extremely basic technical plan. Do not think that this is as well, honestly, my structural plan that I have for my students and for myself is all actually very, very simple as well and very, very precise. But at the same time, this is like rudimentary. This is like if you're really learning to how to trade, this will get you to where you're making money, maybe on a consistent basis. But on the more extreme ends, you might again, you might need. I'm not gonna try to. I'm not gonna try to promote my group, but like, look, I have students that come in 48 hours and
I'll
make.
promote it. I'll promote it for you. Listen, sauce is sauce. This man got it. It's simple. It's very simple.
Yeah, I mean,
You could
I
go
don't.
from 4R. My bad. I don't mean to cut you off, bro. It's just you can go from 4R to 5R, 10R on the regular, like type shit.
Yeah, what he's basically saying is for every $1 you risk, you make $10 back. So whether it's $20, you make $200, and it sounds kind of unrealistic, but you know, we'll talk about that later.
It
But
happens.
so that is your standard operating procedure. This will get you to where you're consistent in terms of your process, in terms of what you're seeing, in terms of what you're understanding. So again, this is all being recorded, so you can take a screenshot of this if you're new and you have nothing to go off of, but this will get you really in a good spot. So now let's utilize this standard operating procedure for past or prior price. This is how you learn, right? So let's utilize it for last Friday, right here, right? We're on ES futures. So the first thing we do is check Forest Factory, red and orange folder news, USD. So when we go and we do that, Friday was unemployment claims and a few other Empire State, Philly Fed, all these things. So, what you would do is go back 3 years, see how unemployment claims performs, da 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 da. It's a pretty decent day. So let's look. The second is pick and choose which day. We'll move past that. We already choose to trade this day. The third is formulate technical plan. We already have our technical plan. Your first step is to mark structure in the 1 hour time frame. Now, what is structure? That might sound like a stupid question, but again, some people don't actually know. You have price going higher and higher and higher, and we have structural names for these things. So we have a structural high, a structural low. That's a reference point. So for price to go higher, it needs to create a higher high, and it needs to create a higher low, a higher high, higher low. When we're going down, however, price will create a high, a low, or a lower low, a lower high, a lower low, a lower high, and a lower low, right? And we're going to go deeper into why these things matter and why it's going to be very, very key for you to understand what structure looks like. Because this is just me showing you in a line diagram how that would look. But in real time, with real candlesticks, right? These are called candles. You want to be able to mark it properly because it's not just going to look like a line, right? So let's take a look right here and mark your structure. So structural points are validated by things called swing points. Swing points are simply a high or a low, but on a candlestick format. So when you look at this candle right here, let's zoom in on this candle right here. The candle to the left is lower, the candle to the right is lower as well. That means that this is a high. I also want you to look at this too. This can also happen. You can have a high and a low at the same time. The candle to the left is higher and the candle to the right is higher. So we have a high and a low at the same time. Now I want you to take a look a little bit further, right? Is this a high? Yes, it is. Why is it a high? Because the candle to the left is lower and the candle to the right is lower as well. So it's a high. So this is your lower high, right? You're starting to see it. This is your lower low. Why is it a low? Candle to the left is higher, candle to the right is higher, lower low. Now remember what I said. All you're looking for to enter, if bearish, enter after a low is taken or when a lower high is created if bearish. So again, we trade at 9:30. So all this price action right here at 7 a.m., we would not be trading it. So 9 a.m. to 9:30 to 9 a.m. to 10 is this candle right here on the hourly time frame. So we see that it creates a lower high right here. And we could enter our position as high up as here. Where would the stops be? Basically, the area in which you don't want price to go past. If we're respecting structure, it will be at this lower high because price should not go up beyond this if you want to remain bearish, right? So it has to respect it. Your stops would be there. And what do you do? Target a 1 to 3, 1 to 4. Well, your 1 to 3 or 1 to 4 was hit in a minute, maybe. Let me go look. Um, Pretty sure that was hit in a minute. Uh, your 1 to 3 or 1 to 4 was hit uh, more like probably 10 minutes. So you entered here. It was hit in 10 minutes. So you made your money in 10 minutes and you went about your day, right? That's as simple as this, structural technical plan I created is for you, right? Again, you'll see students of mine hitting it as far as this, which is a 1 to 14. This is what we're talking about. It gets a little bit more extreme, right? So for every $1 they put in, they made $14 back. You can imagine this gets a little bit crazy when you start to see things such as, $400 and you're getting 5,000, 6,000, $7,000 back. Again, these are the more extreme results that I tend to um, produce with a little bit more deeper strategy than this. But this is really, 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 really good to start off with, like extremely good. Um, so that was that day. Let's go to the next day, right? Um, let's go to this day, right? Let's see. Let me just erase all this right here. Man, I forgot. Hey, Moon. Appreciate you. It is no problem. This is all recorded. So anyone who's in this meeting, I will actually I gotta figure that out. If your emails are in there, I can probably email you the YouTube video or I'll just post it in somewhere, my YouTube. But let's take a look at this right here. So check Forest Factory, red folder. This is Thursday, or this is Wednesday. We have, wait a minute. Oh, that was core PPI. Ooh, I forgot how horrible it was on that day. Again, the data, well, let me not go too deep into that. Core PPI, that's a red folder. It's a big red folder. Pick and choose which day to skip. We're trading this day, formulate technical plan. Again, our technical plan says if bullish, enter after a high is taken or when a higher low is created, right? So again, we're going to mark our structure. So the first thing we're going to do is we have this low here. Again, why is it a low? Let's zoom in. It is a low. It is a low because this candle left is higher and this candle to the right is higher. So this is a low. Is this a high? Yes, it is a high because the candle to the left is lower and the candle to the right is lower. So it is a high. So what are you seeing here? You're starting to see that bullish structural formation, low, high, higher, low, right? But the thing is, for us to mark our next thing, we need a higher high. We don't have a higher high, so I have to move this low here. Why did I move it here? Because, how do I say this? If I had marked this low, I would have needed this to be a high. And then for this, because this is a low. So I need to move this forward or upwards because I don't have any reference point besides just a low. It needs to be core was on Wednesday, core was on Wednesday, you on Thursday, price action still looks clean. Oh, this was Thursday. Oh, unemployment claims was Thursday. Okay, cool. Gotcha. Thank you for that. So this is unemployment claims. I guess Friday, even though it was such a clean day, it was just no news. Um, but besides the point, a higher low got created here, and what do we say? We enter off of a higher low, right? And the higher low is only validated simply because the candle left is higher and the candle to the right is higher. So you take that, where should your stops be? Well, we have a higher low here. However, yes, you can use this as a reference point. Again, I'm thinking about how I would look at it with my students and myself. It would be a little bit more extreme, but this will get you that simple 1 to 3 or 1 to 4 RR, um, you know, that we're looking for. So that's just about a 1 to 4, 3.9. That's it. That's the rest of your day, right? It took this was a little longer. It took about an hour and 32 hours, maybe max, for you to hit this. But again, this is a great start, especially if you're very, very new to this. I can do some more examples. Let's see right here. We have a low, a high, a lower low, and a lower high, right? And then we take a low right here. Remember, the rule was either you enter at a lower high if bearish or after a low is taken, right? So now your position will look something like, well, you want to have your stops at least to this high, or maybe you can even do the candle body. That's fine as well. The candle body would just simply be the body high of the candle. And then again, 1 to 3. Hopefully, can we get that? 1 to 3. We got a decent 1 to 3. That's it. We couldn't push for the 1 to 4. 1 to 4 would be you'd be holding and you lose all your profits, right? 1 to 3 achieved. Followed our rules. Perfect. Great. Wonderful. Right? Do we got another example as well? Let's see. This is technically a high, a low, a higher high. This is interesting. Lower low. Now you have two options, right? Remember, if you're bearish, you can enter right after a low is taken. However, what is your reference point? Your reference point would be this high right here. That would be a very, very, very big, big stop loss. I don't think you would reach your 1 to 2 or your 1 to 3, right? So this would not work out. But remember the other part of the plan. You can also enter if bearish at a lower high creation. And what do we have here? A lower high. So now it could potentially become a bit better. So again, this is still too much of a stop loss. You can put your stops at the body high, at the body of the high, which is this part right here. Go for a 1 to 2. Oh, well, 1 to 4 is reached pretty easily, right? 1 to 3 is reached pretty easily, right? 1 to 4 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 is reached pretty easily, right? 1 to Well, technically it was reached in the same exact candle, so maybe 30 minutes or less, 1 to 4 reached. You see how our rules, even though they're very, very simple, it seems to be repeatable and systematic in nature, you know. And due to time, constraints, I don't want this meeting to be too long. This is as far as I go when it comes to, the steps. You have a standard operating procedure. You have an identification of days, when to take advantage of days, when to skip days. You have a technical plan that seems to be pretty succinct. I mean, I didn't skip any days. This would be again pretty much the same result. It takes the high, right, and you enter, right. This seems to be pretty succinct, right. Um, let's see. What am I missing here? Am I missing anything? I'm not missing anything. Um, the only thing I would say is, even though, so we speculate that a swing point will be created, we enter before swing point is created because we would need next candle to form. Yes, and you can kind of see this happen. Like you can kind of anticipate this because, for example, let's take a look. Let's honestly take a look at all these examples. So this is a great question, right? This person's thinking, why can you anticipate that this will be a swing point? Well, we look pretty bullish and we take this candle's low. If we still want to be bullish, 90% chance that the next candle will open higher and keep going up. So you can expect that this candle will be a swing point. This, or this is not a swing, well, this is a swing point. This, we structurally shifted to the downside. We failed to take this structural high, so we're not bullish. We stopped right here. We took this candle's high. We created a lower high. There's a 90% chance if we want to keep going lower, this will be your swing high, right? It's that simple. You're simply looking at structure, looking at narrative, and you're saying, okay, because we took this previous candle's higher, because we took this previous candle's low, if we still want to flow in this direction, this has to be a swing point. That's all you're doing, right? And if you go on your charts and you mark this, what I'm showing you here for the last 30, 50 days, man, it's just so accurate and simple. And this is not even a tenth of how deep I go with my students. Again, my strategy is also extremely simple, but it's much more precise than this. So you can imagine if you're getting these 1 to 3s, 1 to 4s just with this, there's levels to this. And this is a great beginner friendly perspective of the market. And if you can master this, learning what I teach or maybe what you create, whatever it is, I'm not trying to push my thing. I just want you to do really well for yourself this year. Um, it, it'll be very straightforward whenever you're in the markets. Now, another thing, another caveat I want to go over. Please pay in mind when I'm marking structure. I'm not, when I'm marking structure for this day, I'm not going all the way to my left and being like, okay, high, low, high, low. Oh, okay, so we're going to keep going. No, I'm starting. Look at the time that I'm starting. I'm starting around 2 a.m. 2 a.m. is my reference point and onwards. And I'm taking my trades usually around 9:30, 10 a.m., 9:30 to 11 a.m. By 11, I'm really done most of the time. So that's a really important keynote because a lot of people, they tell you to mark structure, but they'll literally be zoomed out like this and be like, okay, we got a low, we got a higher high here, we got a higher low here, got a higher high here, we got a, like, you do not want to do that because you're trading, right, on an intraday basis, meaning within the same day you're in and out of your trade. So having all this information here is more for if you're swinging, meaning if you're holding your trade for weeks to maybe a month, that's great. But you don't need that information when you're intraday trading. So you want to start marking your structure from 2 a.m. onwards, 2 a.m. onwards, 2 a.m. onwards. And that's it. I pretty much covered what I wanted to cover. I believe that this is again a really, really good start if you are a beginner. This is honestly better, like way better than honestly. I'm kind of sad that I didn't have a video like this or a live like this when I started because this would have completely made things so much easier for me in my journey because it's just when you have something that's so consistent and so repeatable, it tends to make it easier to get to the goals that you want, whether it's just making a few $1,000s. Again, I have higher standards for my students. All of them are 6 to 7 figure earners minimum. There's nothing less than that that I expect because when you go deeper into this, it becomes so repeatable that it's almost difficult for you not to be in that range. But this is, again is a very, very great start um, for really anybody that's new, anybody that's just trying to get into this. Um, if you guys have any questions, you guys pretty much have like my social medias. Whoever's in here has my social medias. You can really just send me a message. This will be posted in the Discord and on YouTube. Well, the YouTube will be posted in the Discord, so you can see that. You're welcome. Um, and yeah, if you guys have any questions, just let me know. I want to get a kind of a poll of the people that are in here that have my social medias because I'm wondering whether I should send to your emails or if I should just send the recording, post the recording on my Instagram or something like that. So trying to figure that out because I want you guys to get this recording, right? So that's what I'm trying to figure out here. That is what I'm trying to figure out.